Uber-backed Lime raised $174 million in its public debut, pricing right at the midpoint of its expected range. Joining us from the Nasdaq is Lime CEO Wayne Ting. Right now I'm seeing shares indicated opening around 27, having priced at 25, but this is an IPO that Bloomberg's saying is about 6 times oversubscribed right now. You joined Lime from Uber in 2018. It's been a long journey. Just reflect on what this moment means to you.
For sure, I think it's a huge day for Lime, and I think to see our business validated in this way is wonderful. We operate in 230 cities around the world, 29 countries, 5 continents, and we have built a differentiated business model. I think there are a lot of other companies have tried and not succeeded, but we have great unit economics. We're free cash flow positive. We continue to expand our EBITDA margins, and I feel like with this IPO, we'll have more capital to invest back into the city to bring Lime's very important service to more markets around the world.
When you point out you're already in so many cities around the world, what then is the growth opportunity? Where can you go that you're not already in?
The biggest growth opportunity is actually deepening in our existing markets, because only in our existing markets do we have the reliability where people can use Lime every single day. So we oftentimes see the fastest growth rates in some of our biggest, most mature, quote-unquote mature markets. For example, like London last year grew faster than Lime as an overall company. So I think what you'll continue to see us is to deepen deployment into our existing markets. We also still have lots of cities around the world who can benefit from Lime that doesn't have Lime. So I grew up in Lincoln, Nebraska, and I would have never expected Lime to work in Lincoln, Nebraska, but we have a great business there. During football games, during lots of major events, there are congestion, parking shortages, and Lime offers a great complement to their transportation system. And there are a lot of Lincoln, Nebraskas in this world that still can benefit from Lime. So I feel very bullish about future growth.
When I came to San Francisco in 2018, scooters were the story, but it was so different. Scooters were everywhere. Bay Area residents were throwing them into the Bay. The relationship with the city from a sort of permitting perspective was pretty fractious, and then COVID came and that really impacted the business. Does any of that still remain? How different are things now?
The world is very different today than back in 2018. One, I think the value and the value proposition of micromobility is more clear to cities. Urban transportation is broken in lots of major cities around the world. Congestion is a challenge, affordability is a challenge, pollution is a challenge, and the impact of climate change. And the incredible thing is Lime is a solution to every one of those transportation problems. So I think when we show up in a way that is obviously in support of the city's transportation goals, and we come with a commitment to compliance and safety and in supporting the city's transportation goals, I think we've improved those relationships quite a bit. We are in hundreds of cities around the world. Most of those relationships are multiple years, and we feel very good about the future partnership with cities.
You went public because you needed to. You needed the capital. So the balance sheet's kind of cleaned up now. But a story of this IPO moment is very quick return to the capital markets. So will you do that? Will you look at debt? How will you continue to fund that CapEx?
I just want to challenge the idea that we have to. I think there's lots of different ways we could have dealt with any sort of debt maturity. The reason we're going public is because we think this is a great opportunity for new investors to come into Lime. We'll have great places to deploy that capital, and it'll be a very fantastic returns to the investors who are coming in during this IPO. That excitement for the future growth opportunity and the business prospects is why we're going public today.
What about some M&A? Let's think a little bit about New York City, right? If you wanted to get deeper into cities like New York, would you look at other bike businesses?
I think M&A is definitely one area we can look into now that we have public equity and more capital on the balance sheet. I would say our bar is very high because we get 50% plus cash margins on the average trip, less than 1 year payback on the bikes and scooters. Our competitors are nowhere near those margins and returns, and many of them have been donating share to us very very kindly, and I think we can just out-execute them and get a lot of that market share from them. And so we have to believe there's something to buy that is accretive to our investors. But I'm certainly going to take a look at all the companies out there, and I think consolidating the long tail is one of the opportunities that I see.